All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage, and we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, do me a huge favor this morning. Drop me a one in the chat. Let me know that you're all ready to go as we look to take massive action, making sure that we have the strong foundation each and every day, making sure that we're accepting all possible losses before entering a trade, preparing you for any outcome. Let's make sure that we center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. Let's trust in our education, strategy, trading skills, and intuition. Let's imagine our trades successfully materializing. And we always want to be sure to obey our trading strategy, avoiding decisions based on greed and fear. And we never want to look back once our trade has commenced. So, happy Friday, everybody. Welcome to the session. And today, right, is non-farm payroll day. All right. So, we've got non-farm employment change coming out, average hourly earnings month over month, unemployment rate. We also have ISM services PMI. We also have, right, tonight, it's later tonight, but we've got a FOMC member, Williams speaking, and then Saturday speaking as well. So we'll see what happens there. But this is, right, this is the key report. All eyes are on this report. As a matter of fact, front page trading economics. U.S. job growth likely remained strong in April. The U.S. economy likely added 243,000 jobs in April, a slight deceleration from the 303 jobs added in March, but remaining above the average pace observed in the latter half of 2023. Simultaneously, markets are forecasting a 4% annual increase in earnings, the smallest since June 2021, and the jobless rate to remain unchanged at 3.8%. Now, this is trading economics projection. We'll see how things come out, right? Has it been wrong in the past? Yes, right? So we shall see. On other fronts, the Eurozone jobless rate holds at steady at 6.5%. World food prices edge higher for a second month. All right. And we see that European shares slightly higher on Friday. We see that Turkey inflation rate accelerates to 69.8%. And we see that the yen set for a strong week on government intervention, right? So they did intervene, which is what Ryan have been forecasting for quite some time, holding strong on those yen shorts. And we can see that it is paying off right now. So clicking over, taking a look at the DXY, right? So the dollar index fell below 105.3 on Friday, sliding to its lowest levels in 3 weeks as investors brace for a key monthly jobs report that could influence the interest rate outlook. The index is also on track to lose nearly 1% this week as the Federal Reserve held rates steady and Fed Chair Powell ruled out the possibility of another rate hike despite a delay in the timing. Meanwhile, policymakers acknowledged that inflation has moderated over the past year, but remains elevated, saying there has been a lack of further progress towards the central bank's inflation objective in recent months. Externally, the dollar's decline was exacerbated by a sharp rally in the yen. Appreciate you on that, Ryan. On a suspected intervention by Japanese authorities. The greenback also fell about 1% versus the yuan this week, despite holiday then trading in China. So that, right, the fundamentals, okay? Any questions regarding that or any of the fundamentals?
Benny.
Yes, sir.
Yeah, the intervention by the Bank of Japan.
Mm-hmm.
When you say intervention, what do you mean? Did they prop up the price of the interest rate or the value of the yen? I
They're
don't
propping up
understand.
the they prop up the value of the yen. So let's go to our yen expert. Good morning, Ryan. How are you, sir?
I am doing well, bro. How are you?
Doing pretty good. You wanna talk about the yen and exactly what they do when they intervene?
Yeah, so um this time they did a couple things. One is buying yen, right? So buying back their currency
Mhm.
um through the exchange, right? So exchanging other foreign currencies for the yen to increase the value. The other thing that they did was they bought yen future contracts. The second intervention. The first one on Monday was them exchanging the currency, right, in those in their current accounts, and buying back yen in exchange for other currencies. The second one was they bought yen futures contracts, and once the COT report comes out, we'll be able to see that. And in doing that, that's also buying back more yen, right? And so ultimately that increases the price of the yen in exchange for US dollars.
That makes sense.
Yes, thank you.
Yep.
You're welcome.
Because when they buy it back, right, it's strengthening the yen. It's taking that currency, it's taking that more yen out of circulation, right? So that's exactly what they did, and all eyes are on this non-farm payroll report today. So Ryan, great call on that. Great research for weeks and weeks and weeks tracking this, and it happened, right? It happened. It only can go so high, right? And we see the correction coming into play. So moving along, right? We're gonna go right into the charts and check this out, everybody.
Real quick, bro. I'm
So,
sorry.
huh? Yep, go
Real
ahead.
quick. One of the things I was listening back, Jerome Powell's press conference. One of the things that he said that caught my attention was um, they continue to look for confidence that inflation is easing, and they no longer have that confidence. Um, I took that very interesting, and him basically saying they're not confident that what they've done is enough. Um, and so he still left potential rate cuts on the table, but those words, um, they were they stood out to me regarding their true perspective on where things actually are, opposed to the balancing act that they have to play. Um, so it's to me, it sounds like they definitely have concerns regarding inflation, and we could potentially see in the future that narrative start to shift regarding inflation and where it sits and where they see it in the future.
Indeed, that was key, right? A change in that language, right? That's why, investors and experts go through and they read every line of the statement, every line of the speeches that these important players make, because definitely a shift, which then led to them not really giving any type of date in regards to rate cuts or anything like that.
Yep.
So
Yep.
yeah, so I that was a great catch that you made on that, because there definitely was a shift in the rhetoric. So appreciate that, man.
No doubt.
Yep. So here we are. So we've had this little rectangle box drawn up for quite some time, right, on this daily chart when it came to the dollar index, and we can see we are headed right to that level, right? So am I still a dollar bull? Yes, but I do understand we're in a correction phase. So the question is, hey, do I start to build positions, right, on these dollar crosses, right? As we see, we are kind of approaching this level where we may find some support with the dollar, right? And so we know that the non-farm payroll is gonna, have a pretty large impact on which way this dollar is gonna move, right? Is it gonna push further down and then find support, or are we getting ready to make a U-turn? we shall see. So this is where we are on a DXY. So things are playing out, right? Where we need them to play out. So the question is, are we going to find support at this level, right? That's 61. It was that 104.65, somewhere around this zone. Okay. Any questions on the DXY? So we're in an up retracement zone. The dollar is correcting. Okay. So we can see why these reports and this data and these fundamentals are huge, Okay. So Ryan had with the yen, yes, it was going in the opposite direction, but he has started to build small positions, right? It comes down to the math, the magic's in the math and the risk management when we're swing trading, right? Now, if you're the type of person that likes a tighter stop, you typically get stopped out, more often, but that's okay if you use tight stops. Just make sure your risk management is stellar and that you have an edge in the market, right? That you're still trading your sweet spots, even if you use tighter stop losses, right? I typically like to leave my stop losses wide on my setups, right? And then build into position until that trade goes my way, right? So I don't try to get the perfect entries, right? More so just trade the zones, right? So that is the dollar index, right? So let's go down and take a look at some of these scenarios with the dollar, right? So we'll dive in and we'll take a look at the S&P 500 first. See where we are there. Take a look at the levels, and we'll come in right here on this daily, and you can see just ahead of the report how it kind of just ranging, right? So we've made the correction in the 80-20 zone. We had talked about this key support, and we did get a bounce. We did get a bounce. So let's see today, right? Because we sit back and we observe first. We observe to see what the price action is doing to find out what the market sentiment is after a major report like this. Let's see what happens, right? Let's see what happens. We know that we've got a stochastic that's in the sell zone, okay? So we were overbought and we came down and we made a correction. Now the market has to make its mind up. And we'll see if that non-farm payroll report will be a catalyst today to push the market in either directions. In either direction. Any question on the S&P?
No.
No?
No, sir.
All right, we'll take a look at the Dow. All right. So here we are, daily, same thing. Okay, kind of range bound, right? We got some bullish momentum yesterday, going into today ahead of the non-farm report. This here is a resistance level. We'll put that in. Okay, so you can see we're kind of range bound here. Oftentimes you're going to see that ahead of major data. Okay, so we're kind of just sitting steady. All right, it's a Friday, big report. Let's see what happens. Okay. All right. So there we are, kind of just sitting there, right? In between that 38,607, 37,833 on the range. Let's see which way it wants to break. Any questions on the US 30? Nope. Okay. Moving on to the NASDAQ. All right. Similar position. Okay. This one pushed down further, but you can see how we're kind of in that range. We got that push, right? So this one came, this 80-20 swung all the way back on the daily to that 382 level. Got a bounce, but you can see how we're kind of just moving sideways. So the same thing across the board here on these pairs, right? We say it all the time. It's a pattern-driven market. Okay, look at the price action pattern. Okay, there we go. Candlesticks, the sign language of the market, all pretty much doing the same thing, moving sideways ahead of the data. Okay, so that's the NASDAQ. Moving on, going back to this Aussie dollar setup. Still within our AB boundary, rallied yesterday, right? The Aussie continued to rally. So you'll notice the pattern as we go through these dollar crosses this morning, right? So pushing from the weekly time frame, right? Pushing long still, pushing long. Here we are, okay? This is our daily, right? Kind of just been in the range, right? Nice move down, then we came back up, trying to figure itself out, okay? So we're right here at this daily level, this 65.85. So we push back higher. So you'll see we're ahead of the data. We had this smaller move yesterday, right? Where we had our fib running down on the sub fib. We said, hey, you put it above the A, two options, your stop, or above the C if you like the smaller position. If you put it above, right, the high, you're right there, right? You put it above that high, you're right there on the verge of a stop out. Above that high, where we had that stop yesterday here, like around this area, right? Above that high, okay? So if you leave it wide, though, you see you got room, okay? And we worked out the math for both setups yesterday, okay? So this has moved a little bit higher, but what I want to show everybody is how, okay, we've pushed back up to this level, and you can see how we're kind of set up for a potential double top in this range up against this downtrend line, okay? So we want to see how the market reacts. We're still within the AP boundary. So either we turn over here as a result of non-farm payroll or price pushes higher, right? Pushes higher within our AB boundary. Okay. Yep. That M-type structure done that. Great observation. Right? That M-type structure. So it's just a matter of whether or not we hold. Okay. All right. This is what Donette is talking about. Okay. The double top type structure. So the payroll will be non-farm payroll report will be quite interesting today. Okay. So that's where we sit there. Staying patient, right? Staying patient, seeing if we can get the swing. Okay. It's kind of tough coming off of the uh the FOMC rate statement. Like Ryan said, the change in the rhetoric, what the data has been for the United States, wages sticky, inflation sticky. It's kind of hard to see which way this is going to go. We know we looked at the DXY where we do have a little bit more room to the downside if it's going to find that support level that we were talking about on the DXY. Okay. So this is where you kind of just sit back and observe, see what happens, and then make your move afterwards. Okay. All right. Everybody give me 1 second. Be right back. All right. Sorry about that. I had to make sure the kids were up. Okay. So that's the Aussie dollar. Any questions on the Aussie dollar? Nope. All right. Moving on, right? And then just look and see, right, the positions, how similar they are with these pairs. All right. So let's take a look at the Euro USD. Okay. Right? From the daily time frame, climbing a bit. Okay. We've got resistance right here. So you drop your trend line. Okay. Like so. And we can see where we're coming into resistance. Okay. Similar. Okay. Similar price action right now. Okay. There. All right. Now we move down to our 4. Okay. And you can see where we're sitting lower in the zone, stochastic overbought, but you can see where we're kind of, whereas with the Aussie dollar, we're already there at that double top. You can see here where you have a similar situation where there's a possibility for it. Okay. Where we got that same move down, and then the price, right? The price action moved and took it pretty much all back, right? The nice move down, and then look at the V-shaped recovery here to move back up, right? So we keep an eye on that 107.50, 52 level, and then here we are here, looking at it from the 1, just zooming in, right? So different, you know, area of the fib, but similar price action where we got price to move down, and then all of a sudden, right, we got buyers that come in and push that price right back up to test that zone. So we sit and we wait. We sit and we wait. Any questions on a Euro USD?
No.
No, sir.
All right. It's a pattern-driven market, right? It's a pattern-driven market. So take a look at the pound dollar, okay? Where we can see, right, similar type action, okay? Look at this. Different currencies that the dollar is pegged against, but pretty much the same price action. Past support becoming future resistance. We're pressing against this trend line, okay? Pressing against this trend line here. So if we come to the 4, similar scenario, right? We know we had the 80-20 play before. We got the swing there. Now we're at this 50% level, okay? Starting to press that trend line, that 125.68. So again, another double top scenario in the zone, okay? The M-type pattern that Donette is talking about. Okay, so let's see what happens when the report comes out. We note that. We note these things. We journal these things because patterns repeat themselves. So we want to know for the future, okay? So we're at a 50% level here, pressing, right? Starting to press this resistance zone, okay? Just ahead of the data, right? And here we are on the 1. Okay. A little higher level there, smaller fib, 50% zone again, right? 50% zone again. I say higher level, but the same thing. 50% zone again, sitting here, okay? Any questions on the pound dollar?
No,
No.
sir.
All right. Moving on down, okay? NZD USD. pressing a level. $59.84. Pressing the zone up against this inner trend line. Okay. Same type of moves. Price action. Okay. Four-hour, right? Beautiful reversal. Okay. Beautiful reversal. Okay. But look at the pullback there. Okay. Again, pressing resistance at 59.84 up against the trend line. All setting up ahead of the data. It's going to be interesting to see which way this wants to go. Okay. Here we are on the one. Sitting at a 786 level now. Pressing the level. That's where we are. Okay. So those are all your pairs, right? Where you have the dollar sitting as the counter currency. Any questions so far?
Gonna be an interesting day, bro.
It is. It is, right? We let these trades fall in our lap. Let the market do what it's going to do. Let it react. We see the pattern. Okay, it's gonna go up or down. Right? Make our moves from there. So moving on, right, to our dollar pairs. Dollar's the base currency. Dollar CAD. Right? We can see we are correcting to the downside. Okay, so it's just the opposite, where we got the strong move down in the pairs that we just covered. You got the strong move down, then back up. We got the dollar as the base currency now, right? So it makes sense. Strong move up, and then it reversed and took it all back to the downside. So the market's getting whipsawed a bit. So here we are. Dollar CAD. Okay. If we move and take a look, all right, we saw oil prices take a move to the downside recently. We had Macklem speaking yesterday, said that we are getting closer to cutting interest rates. That's what the Bank of Canada governor said. Okay, you don't hear the Fed saying that. Okay, we've had one central bank so far cut rates. That's the Swiss National Bank. Okay, so we're starting to get some central banks lining up. ECB talking about June. We'll see. And we've got Governor Macklem now, the Bank of Canada, saying we're getting closer to cutting rates. All right. So we're looking at this as a correction. Okay. DXY is moving down, trying to find that support level. So right now we're on a decline. It's going to be interesting to see. So we hit the 118 zone, came down, reversed from there. Okay. Here's this move here, straight out of 80-20 zone, looking to move down. Okay. So just painting the visual picture of where we are ahead of non-farm payroll. And we'll track closely the aftermath, right? See what happens. So do we move to a lower price? Dollar weakness after non-farm? Right. Or do we reverse out? That's the dollar CAD. Dollar Swiss. Look at this here. We stalled. Okay. Got back below that 91.10. Okay, we were talking about that level. This is the daily. So do we move down to retest this level here at least? Okay. That's support. No sense in trying to guess. The market will tell us. Patience is action. Okay. Patience is action. All right. So moving down to the 4. Okay. We're talking about this. Is this 91.10 level going to hold? It is clear that it did not. That's what we were waiting on yesterday to see. We said if we break 91.10, we may see more downside pressure. And that's what we're getting. Okay. Set your charts up. Let your trades come to you. Okay. Here we are on the 1. Okay. Turned over right at the B boundary, moving lower. Any questions on the dollar Swiss? No? Okay. We will get the setups that we want. We just have to be patient. Okay. Just has to be patient. Now, here. Okay. We know anytime higher time frame extensions get hit, usually get a strong reaction. Okay. We know now that the reaction is a result of high level being hit. We said, hey, 156, and the Bank of Japan is stepping in. Okay. The number before when they stepped in was 152. They let it go all the way to 156. They stepped in. So here we are, 160, actually. Right? was around the high, 160.20. And they stepped in. But look where we were, everybody. Okay. Look where we were, right in our zone. Price is retracing. I don't think that's a coincidence. I just don't. So we're moving down. We'll see if we take that A out on the 4. Seem to see more downside pressure. Don't know. All right. Moving down and correcting. That's where we are on the dollar yen. Any questions on the dollar yen?
No.
No, sir.
All right.
I'm interested to see what the pullback is going to be like on this. Do we go
Me
back
too.
to 160 or do we stay below 156?
I don't know. Good question. I don't know. It's a little challenging with the FOMC being steadfast, and that. So it's like the weakness in the dollar now. Right now, I can only see it as a correction. You know what I mean?
Mm-hmm.
Not a trend reversal on the dollar. I don't have any reason to, you know what I mean, to think we're about to see the dollar, become weaker now. Back half of the year and things like that. Like they're not even talking about rate cuts at all right now. Whereas you have other central banks starting to creep in. So I have a hard time thinking that, hey, we're about to see a long period of dollar weakness. So I'm only seeing it as a correction right now. So some of these are challenging because we have plays like the Aussie dollar, NZD dollar, Euro dollar, pound dollar, right? Where they're moving up in that down AB boundary and starting to move and push to some higher levels. And then at the same time, we've got, these 80-20 corrections on these
Yeah.
other dollar pairs and some of them. So, I'm thinking maybe we see more downside pressure on the dollar to that support level, which will push it higher in those zones. Maybe we get to a 786, 86 level on the Aussie dollar. Euro dollar wasn't even at a 61.8 yet on the 4. So maybe we push higher, then we turn over. So it's a timing thing, which is why I like to trade zones and not try to be exact and use too tight of a stop loss, give it room because it can U-turn anywhere within that AB boundary. You know what I mean? So that's what I'm thinking when I'm looking at these dollar pairs and tracking them closely. Right. So we may see a higher push up, on the Aussie dollar in this to a 8.6 level, before we turn over. It may not hold here. Right. As that DXY looks to find support and to find buyers. This Euro USD, right, look at where we are in regards to this 4 hour, where if we push through that zone, maybe we push 50% level, 61.8 level, DXY finally find support at that point. But that would fall more in line with, okay, well, on these dollar-led pairs like a dollar Swissy, we don't have a 382 yet on the pullback. So maybe we do see more downside pressure in the short term here. Right? And price moves down, at least back to that support. So I am looking forward to this report today because I'm looking for clues and answers, right? And what's next?
When you look at AU and you do the fib to the upside, it's coming into the extension. I think it's on the 1 hour when I looked at it.
On a one, okay.
All of them are coming into even GU.
Mm-hmm. Pushing pretty high, right? So
Wasn't GU the one with the head and shoulders? With the reverse head and shoulders?
not sure. Oops. All right. I think that was on the 4. It might have been. I don't know. Was it this pair? Yeah. It was on your 4 right here.
Yep.
That swing to the upside. All right. So we'll see. All right. All I needed to do is to make U-turns within this AB boundary. Okay. So think about it. Okay. So we talked about it yesterday, 2 scenarios, 2 positions, one with the tighter stop above your C, and then leaving it above the A. Okay. I like when my stop is above the A because I could go in 0.25%, 0.5%. Okay. At my levels, right? But then I could take it here and add another 0.25%, 0.5% once it pushes higher. As long as it turns over within my AB boundary, I'm good. So if I'm at a 0.25%, at these levels, then if I get stopped out, I only lose a 0.5% on the trade. Does that make sense to everybody? Yes, no?
Yes.
Yes, sir.
Okay. So that I can live with that. Right? Even if you did a 0.5%, you had a 1%. Like I can live with that. Okay. Donna said I love the dollar crosses setup more. AU, EU, GU, NU. Me too. I do too. I do too. So I would like to see them play out in our favor, right? So if I'm only out a 0.5%, because then I can make the multiple plays on the pairs if I want to. Okay. But I'm not taking it, what I forget the trader who said it best, but he said, he used to say all the time, you know, when you trade, make sure you use a finger, not your whole hand, right? I only want to lose a finger, not my entire hand when I'm trading. Okay, so just remember that, you know, as it relates to your risk management. Okay? Because you don't know trading is probability. Okay, Jeremy laughing. Right? So you don't want to get blown up. And I know that that type of trading has made itself popular, you know, online, but that's not what you want to do. Not to be in this for the long haul. Not with a lot of you, you know, making a decision to say, you know what, I'm gonna do this Darwin thing. You know, I'm gonna make it work. And then when it's about the long haul, you don't want to do that, right? So don't lose an entire hand, maybe just a finger, right? Okay. So that's what that's looking like. So things are shaping up. It's pretty interesting. Okay, ahead of the data today. Let's look at this gold versus the dollar. Okay, we know we've been pretty high. Right? Gold's been running. We've since gotten a correction. Look at that. Right, and where we are. Okay. New AB boundary. Okay. We're the key support level, 2288. Okay. Now we know gold can get volatile during non-farm payroll for sure. Okay. Can make very, very strong moves. All right. So we just got a new AB boundary starting. We're seeing a correction, holding as support. Let's see how it plays out. See how this plays out. Okay. 4 hour at a 50% level. And support. All right. So we wait. We wait. Okay. Take a look at oil. It's the head of the data. You see that how we've declined, right? We're talking about that. Look at that. So Joy, with the discussion yesterday, right, that we had, okay, you can see, right, exactly what's happening and why they're looking at stepping in. Okay. Right. And then we posted Ryan, did you get a chance? I sent you that article. I don't know if you seen it. I know you'd be on the move in the morning, but I sent it late last night. I posted it in the group too. Where the American oil tycoon accused of trying to conspire with OPEC to inflate prices.
Yeah, I saw that. I didn't get a chance to read it yet, but
What a mess, right? so so man, oh man, greed. Jeremy read it and it's interesting, right? Greed, man. Like just if you have the name tycoon, I'm assuming that you have a lot of money already. So it's like, come on, man. It never ends. Yep, like a terrorist. Economic terrorism. That's what it is. Yep. So we see it moving down. That's why you see OPEC. Joy was talking about yesterday the discussion about cutting supply, right? And you can see, look, it's totally collapsed. That was an 80-20. Right? It's 80-20. That topped out. So we turn that over. Oops. It's such a powerful zone to trade. Okay. So we'll see if we get pullbacks or further declines. Any questions on oil? Any questions on gold? Any questions on anything that we covered? Wanted to make sure we really focus on those pairs ahead of non-farm payroll today.
Nope.
No.
No? All right.
No.
All right. Well, that's all I have, ladies and gentlemen. I wanted to stick to strictly those pairs today because we've got some pretty important data coming out on the heels of the FOMC statement and rate decision from the United States. So let's see what happens, because this is the report that the Feds, all your big time investors, the entire stock market, everybody's watching that report today at 8:30. Sometimes through a non-farm payroll, we have Canadian data, but we don't have that today, right? A lot of times that happens on the same day, but we don't. So it's all strictly non-farm. And then we even have ISM services today, PMI. Okay. So for people who don't know what that is, that's the Institute of Supply Management. Okay, it's the leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. So it's a survey of about 300 purchasing managers, which asks respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventory. So above 50 indicates industry expansion, below indicates contraction. All right, so that's a very important report as well. So jam-packed for your Friday, so we'll see if we get the volatility. That's all I have. Ryan, anything before we close out, sir?
Man, great session. Good people. Just be patient, right? Allow the market to do what it does. And then after the reaction, then we'll take a look and see where we are.
Sounds like a plan to me. Everybody enjoy your Friday. We'll see you tomorrow, 7 a.m. Eastern Standard Time for the weekly ritual. Look for updates in the community regarding the non-farm payroll data. Have a great day, everybody.
Thank you.
You're welcome.
Thank you.
You're welcome.